So just like relax a little bit. Look, we
Mm.
have a little pool here.
Wow. Wow.
Oh,
Part of your
that
room?
that yes, huh?
It's part of your room?
Two room, yeah. So
Oh.
yeah, part of our room. This is where the door to the room, and
Mm-hmm.
Nick and Son is there, hanging out with June, so we can be
Mm.
here outside. There's a little pool. June love it a lot. It's just small, so
Mm-hmm.
small, but it's enough for like 4 people, 5 people in there hanging out. And we
Nice.
have a sitting area, so we sit here. Sasha sit here. Yeah,
That's nice.
yeah.
Hey, happy birthday, Sasha.
Thank you.
Happy birthday, man. Yeah.
Thank you.
Did
Appreciate
you,
it.
did you guys do anything on your birthday? I mean, besides being here, what you guys do? Dinner?
Yeah, we had a dinner, we had a uh beach beach club date for I don't know, 6 hours we were at the beach,
Mm,
Oh, that's so
yeah,
fun.
amazing water, just
yeah,
everything incredible.
yeah. Tomorrow is last day, and then on the 22nd we leave, right?
Yep.
Yeah. So short but sweet.
It is. I'm happy you guys got a chance to go. That's so nice.
Yeah.
Mm.
Thank you. So um for today, I thought I would go to the Milo. So 1 second. Let me see what I have the underwriting of that. I can share with everyone how they underwrite it and how like the real numbers coming out after the first quarter of operation. Gotta see how they do it, and what do we expect when we really buy a deal, underwrite it, we would become like the um the underwriting.
Yeah.
Yeah.
Actually, I'm glad you picked this topic because when I go to the spreadsheet, I get lost between what is the first year. Because you know how the spreadsheet always thinks, okay, what's going to happen the next 5 years, like 5 years analysis. I wonder what is the first year, because it also talks about year number six. So it's better that it is good to talk about it. Yeah.
Yeah, yeah, yeah. I think that would be realistic. Such that you have access to the Milo. Oh no, or you can have me here. So inside, on okay, I open underwriting, but I can also mm. So the case of the Milo, they have the OM. I'm gonna open the OM. They underwrite. Bob, are you here? I think he's joining. But, oh, okay, okay. Hi.
Bob is on mute.
Sorry.
Yeah, the underwriting. You wanna join the meeting? Yeah, so let Sasha open the underwriting and go through the underwriting of the Milo. Um, but I think we should familiar face today. So we went see that property that we were underwriting, the 66 unit, and the broker said they're like 10 groups, right? And they like looking at it.
Hmm. Yes.
Uh, and
Walker spoke to me the day after you and Sasha did a walkthrough, and he asked what we thought of it, and then he also asked if we have questions,
mhm.
we can email to him. and he'll try to find the answer for it.
Mm-hmm.
Mm.
Yeah, and do they say which day is the last day to put offer in?
You know what? He said he don't have a day for call for offer, but he did said it'll be soon, like in a week or so. He he
In a
he
week.
didn't say yeah, yeah. He
Yeah.
don't have a definite date, but he knows it won't be far. And he thinks that someone will buy it. It will go under contract. Yeah.
It was under contract and then it's out contract, right?
Yes. It was under contract like a month ago. And then buyers couldn't get finance, so they back out. And then a week ago he put it back on the market for us. Yeah. Mm.
I think they put like you can get 80% finance of that. But I think if a bank go in to dig in the numbers like we did, they will see that wait, why the expense so low?
Mm.
And they'll figure out the same thing that we figure out, and they will not approve the lending
Uh, yeah.
because banks are the one that looking at this all the time. They look at all this spreadsheet all the time, right?
Yeah. Yeah. We we do need a faster way to dig into these data. These data takes too much time. These T12 and rent roll and trying to understand what seller and broker is trying to hide from us takes too much of our time. Mm.
Mm. So it's always a learning curve too. Like once we get used to it, I think we'll be able to do it more efficient. Um, Plus like place like cash flow portal, they send the numbers in
Mm.
for you,
Yeah.
so
Yeah.
you
I
don't
plan
really need to
to,
input like one by one.
yeah. Yeah. I already, I know the underwriting for cash flow portal. I was going to pay for it. It's only $28 a month. You can upload a T12 and rent roll and it will extract the data for you. So it'll be easier. It's only $1 a day. I'm gonna do that. Because right now it costs us too much time trying to figure out what sometimes these OM is done by broker and we're not sure what they're trying to present, but we have to dig it up. I mean, understand the data behind it. It takes a lot of time. Mm.
Yeah. Good. So now, Sasha, why don't you go share and the underwriting the Milo.
Sasha, you're on mute, I think.
We have many units, one ones, and I believe the down units are a result of
Fire.
fire. Okay. Yeah. I think the original plan was to obviously fix these up and then upgrade them as well. Is that the case, Sophie?
Yeah, so
Yeah,
no,
so
the Dow
no, the
unit
Dow
is
unit is
I
I
think
think
they
they
already
already
fixed,
fixed.
and
Okay.
And then
yeah, and then when they take
yeah.
over is they
And
start
then when
leasing.
they take over is they start leasing.
Okay. So the asking was 16.8. It was sold for 15.8. Yeah.
Yeah, like
Yeah, like
16.8, right? They
16.8,
asked for
right? They asked for
16.8. Can you go
16.8. Can you
up?
go off?
Yeah.
Mhm. Yeah,
Yeah,
16.8,
16.8.
and then the sales
And then the
price
sales price
15.85.
15.85.
Are you in proximity to each other, Sophie and Sasha? Because I keep
So when
hearing
you
echo.
um
Yeah, I think
Yeah, I
they
think they
negotiate,
negotiate
and they got a
and they
loan
got a
with
loan
3 years
with
interest
3 years
only and
interest
amortized.
only and amortized
Period is 30 years
period is 30
for
years and
5.4%
5.4%
interest rate.
interest rate.
So
So
when they go
when
to
they go to
so they go to if you
so
see
they
the pro
go
forma
to
rent,
if you see
can
the
you
pro
go up,
forma
Sasha?
rent, can you go up,
The pro
Sasha?
forma rent.
The pro forma rent.
Yeah, so almost
Yeah, so almost
they have
they
like a
have
lot of
like a lot of
one. They have a lot of one
they
bedroom.
have a lot of one bedroom.
Just maybe
Just
2 bedroom
maybe
is
2 bedroom is
yeah, very
very
little two
little two
bedrooms.
bedrooms.
Just
Just
18 of
18 of
them,
them,
18 two
18 two
bedroom.
bedrooms.
But
But
average rent
average
when they take
rent when they take
over
over
is
is
900
900
something.
something.
So
So around
around
$900.
$900.
And
And
then
then
when
when
they
they
their pro forma they projected the
the
average
average
rent that
rent
they're
that they're
gonna
gonna
increase
increase
is 11 session.
Yeah, yeah.
I see another um,
No, it's happening.
I
Sorry,
got
guys.
that.
Yeah.
Yeah.
Sorry, folks, we're having internet issues.
You can.
Yeah. So I think what Sophie was saying is that they were going to increase quite dramatically the rents for the ones and the two bedrooms as well. You can see it's anything between 25% and 44% increase.
Seem aggressive, right?
Seems crazy. I think the last couple of deals we underwrote, we were even questioning a 10% increase. So this, looking at this, it feels very aggressive. So, how do they do it? Why do they do it? Sophie, you're more familiar with this deal.
So because they already own a couple of other apartments inside this pocket, so they already rent out those units and they look at it and they this is the same tenant base, they gonna afford this rent. So in their complex they already rent out a one for 1,100, right, with the size of 480 square feet, which is smaller one, and then the bigger one 667, they projected like a 13 34 even. So that's why because that's the rent that they collected at their complex nearby. So they have the real number that that they have from their properties around that area. That's why they can project this amount. And then but the surprising thing is when they go in, they think that they have to upgrade all the old one to be able to get that rent. But in the report recently, their pro forma average rent that the new lease bringing in is 1,290 something. So the pro forma average rent right now that they are projecting, right, like 1,186 is the average. But this is like you need to understand it's a video too. So this is kind of like a snapshot of the average rent that gonna happen when you increase every single unit. So when tenant out and in, maybe one quarter, they have 10 of them. Some like just live there and you renew them. So when you renew them, you have to renew at a lower price because you don't clean up or like paint or anything, right? You just renew the rent, and whatever you increase is not, it doesn't have like, it's not that crazy. So it's a long process. It's a movie. And then here we just see the number here, just like a snapshot of, like Andy say, the 5 years thing instead the uh of the first year, second year, like a process, right? So
Let's look at the maybe let's look at the report.
But anyway, no,
Yeah.
let's finish with the underwriting.
Okay.
So with this pro forma rent, if they can increase like this for all the units, then this is the return that they got for us, the 5 years model here. So they calculate the reversion value and cap rate when they sell is 6%. Can you find where where they buy the cap rate, where they buy?
That would be here in the first right there. If you go back to where you were a second ago. Yeah, right here.
Oh, we're like fighting with
Mosquitoes here.
mosquito at the same time.
Right here. Oh.
Okay, so the cap rate purchase price is 5.1. 5.1, and they're projecting the cap rate when they sell is 6%. Which, you know, conservative, like 1% more. So it's like conservative underwriting. And they projected the first year they have the
That's 25%.
economic vacancy is 16%, and projected year 2 is 10%, 10%, 9%. And the increasing of rent, they projected 2.5%, 3.5%, 3.5, 3.5%.
That's after the major increases of the first year.
Yeah, after the, I guess after the pro forma, right?
Yeah.
Yeah. So that looks normal to me. And then even with that, they projected the return for investor is about 136% in like return. So it means if you invest in them, you're gonna get more than double. So expand. If we look at this 5 years model, can you know how much the return? Yeah. Right. So if they would sell at 6% cap rate at the NOI, let's look at the NOI at the exit project. Net operating income right here. I click this. Yeah. So NOI, when they buy is 800, right? And they projected to first year is 900.
Yeah, they double it.
And then slowly 1.2. Wait.
Correct. 1.7.
And then this is less annual debt service. Is they minus the annual debt service. And then you see the same NOI when they minus that is 561, 561K, 700K, 700K, right? So the projecting that
So Sophie,
okay.
Sophie,
So this is minus the debt, then projecting 700K NOI, then that will you know, with the cap rate, NOI with the cap rate, it will project into the sale price that they are thinking of. Yeah. So if you look at their recently, let me share my screen, recently updated. I can start sharing. Let me share. This is their offer, right? So when they are offering their business plan, yeah, they also showing this, and then they give rent comparable, sales comparable, and then show what they did, and basically at the, like here is your investment. So if you invest 100K, you make like 2.3 or something with them. So this one done. I wanna do this update. Okay. when you see this update, you see this?
I think you're sharing the wrong thing.
I'm sharing the wrong thing. Sorry, guys. Let me share it again. Entire screen.
Thanks.
Yeah. Okay. So this one. Okay. So when they share the update, they say that
This is from August 9th, so this is very recent. So
yeah,
10
they
days
say
ago.
that the renewal for their rent. So from the average new rent renewal from 900, they push it to 991 average. So they on track. I think first year they can push like this, then they can push on track to what they projected. Because every year, if you increase a little bit, then you don't have to do anything, which you save on expense, and then you still can reach the amount of rent that you want. But when they have a new lease, which is the tenant move out, and then they clean them up, and then they push the new rent is almost
So 48% up.
yeah, 1294, almost 1300.
Yeah.
Yeah. So that's what reality is, because the I don't know, the area afford that amount of rent. So I think the important thing that we learn here is we have to know the real numbers that happening in that area with other complex around that area. And that by like getting numbers from the property management
Right.
company or
The thing that
owner.
the thing that worked here is that the comparables were their own properties, and so they know the area really well.
So yeah, they have their own. So yeah, so their total revenue and their pro forma for this quarter, I guess, is 580, and then the pro forma is 552. Can you find this in the underwriting somehow?
Yeah.
And then it becomes the net operating income. I also want to understand whether these are in the underwriting or not.
Well, it seems not, because if you look at the NOI, it's 254 for a quarter. That's $1 million for a
Up to
year.
1 year.
But yeah, but
Because if you go to the amount that they pay the mortgage,
They
700K mortgage or something.
projected year 1 debt service is 561. I'm looking for total revenue 552
Yeah.
projection. So
Yeah.
net operating income is 166. Net operating income is that's for a quarter. That's for a quarter.
yeah,
For the quarter.
Sasha,
Yeah.
So if
Sasha?
you do 166,528 times 4, you get 666,112. And they were projecting
561
561. No, that's that service.
after. This is the.
This is the actual debt
Yeah.
service.
So I don't.
So
I don't understand
Sasha,
this number yet.
Sasha, Sophie?
So this is projected for year 1, right?
Mm-hmm.
Net rental income. Sorry, what's net operating income is right here. So they were pro forma. It was
Total
938.
revenue. This is total revenue and total expense though. So that's why.
I'm looking at net operating income. Just
Yeah.
look at this. See,
160.
pro forma is 166 for the quarter.
Mm-hmm.
So if you add quarters up, you should have this number. So 166.
640.
times 4 is
So it's
6454.
644.
4. But what was the projected is 938, right? Minus debt service
Mm-hmm. I think
is
that's the minus debt service one.
this. It's 377.
Before tax projected cash flow.
Yeah, 377. But they're saying it's NOI.
Mm.
Oh, wait, from Bob. Can you hear us? And Andy has been trying to ask some questions. Viewers, sorry, folks. Yeah, please. I don't know. Maybe we don't hear you.
Can you hear us now?
Yes.
Oh, okay. So, with your current share screen on the OM, they're claiming that the NOI is 254,000 for a quarter. That's a million. But on your spreadsheet, the NOI was only 800. So they're like almost 200 grand higher or 25% higher. For some reason, for the pro forma is way up, 70% compared to 56. That's why the number was kind of messed up.
Mm-hmm.
Yeah.
Yeah, that's what I'm trying to figure out too.
Mm.
So
So Sasha, um, the the analyzing underwriting, that's you did that, right? And off of this OM?
no, that's who did the underwriting for the OM case?
So so there's a T12 and Randall as well. So I think maybe our next step is we can dive into the underwriting using that T12 and Randall.
Basically,
So
the OM is way more optimistic. Numbers are much higher than the underwriting that you show like a few minutes ago.
Mm-hmm.
They were showing a lot more NOI income compared to the spreadsheet. Yeah. So the OM was 25% higher. The OM was showing 25% higher in NOI.
we're like fighting with mosquito at the same
Sorry,
time.
sorry, folks. Yeah, there's like tons of mosquitoes flying around here. Um,
So funny.
so here, let me just share the NOI, the underwriting again. So this is what I'm seeing in the for net operating income projected year 1. It's 938, right? 939. But
Yeah.
what
But according
the
to the OM, they're already at a
Q2,
million. Yeah.
yeah.
According to the
Sophie, can you
OM, they're already at a million.
the OM?
Yeah. The OM says that they're already at a million, which is way higher than
Uh-huh.
938 projection. Yeah.
You have in the same drive.
Okay, so let's look at the OM. What's the OM? The PDF? New leases, the Milo, this one? No.
The OM with the Miller Fund.
The Milo Fund? Oh, okay.
So that's the OM from the broker. Is that the OM for the investor?
Mm. Mm-hmm. Okay, loading.
What we're doing
is we try to use this
what we're doing is we try
picture to figure out the movie.
picture
So this snapshot. Yeah.
snapshot. Yeah.
Sorry, folks, bad internet.
Sasha? No. Sasha,
Yep.
do you think in 5 years they can bring the NOI from 800 to 1.8 million, raising the NOI by 1 million in 5 years? It's insane. Because on
It's
year
not
one,
impossible because, yeah,
okay,
if they increase year 1 by 40%, and then over the next 5 years they increase 3% a year, I don't think it's impossible.
I see. I see. But did they do the capex on the entire is it 100 unit or something? Did they already renovated all of it? Because increasing 40% means you have to be able to renovate all your property in 1 year. Is that possible?
Yeah, they did the capex. Yeah, they paint the whole complex, improve the pool area and the outside area,
Yeah,
and
but
they
like
renovate some of the units. And then they realized that when they clean them up, they also get pretty good rent instead of renovate the whole thing. So they spend less on the capex. Like I mean the interior than they think they would.
so are they done with the capex on year one? Are they done already? Because they're not doing the interior, they're basically doing the exterior. And the exterior is fast, right? Because you don't have to move you don't have to wait for vacancy. You just go ahead and paint and landscape and clean up the outside. That could be done fast. But
Yeah,
so
they done that already.
so are they totally done with the capex?
We can look at the update. Let me look.
Because if they're totally done and they can raise rent by 40%, that's amazing.
Yeah, so they say that in the update, they say um they spent $357,800 on capital improvement, focusing on the key area to boost the property appeal and value. So fresh coat of paint, the whole thing painted, and installed 80 palm trees throughout. So they put palm trees there, and they do the front facing balcony railing. That I can share. So so I think I almost done with the outside. I don't know whether anything else with the office that they're gonna do.
I see.
Uh,
So so what it is they're buying at 16 million, put 3 million for capex, which is 19, and hope to sell for 30 million in 5 years. But 3 million for capex, did they use that 3 million already, or is that just reserve?
I don't think so.
no, they just used 357 so far. So that's why
Because this page says that the capex is 3 million, but it seems like it's just reserve money, right? They didn't spend 3 million on the exterior of the apartment.
Correct. Correct. Yeah.
Mm.
Yeah. I think it's dry powder, right? So they can go in and renovate the units
focus right.
and spend more on the interior as well. So they have the money, they have it in reserves. But what they found is that they don't have to, is that they can raise rent
Yeah,
without spending all that money on interior renovation.
yeah. So for the so I remember, but they still have like $1 million to raise, and now they're like, okay, we can take it or not. We don't really need that because a lot of the rent got renewed and hit the pro forma or even more without spending much. They just spend the money on cleaning that up instead of renovating like they thought they would. So they would save on money on interior recap, but the exterior they already spent. Yeah. So
So that's the update I got from them. And I still try to figure out like, okay, so if that's the case, I still figure like, okay, how many unit got the new lease, right? So seem like they got 20 of them that from the 18 of them from the previous owner that down units, and now they got rent, so that it add in a revenue. Also during a quarter they have like 10 new and they're expecting another 10 new leads in the next quarter or something. So that I think that's the movie that's playing. Let me share. Sasha went to get spray because like we got attacked by mosquito and a baby. Okay, so you see the update picture?
No,
No, you don't, right?
no. Mm.
Because I'm sharing.
Yeah, you
Let's
can
stop
stop sharing. Okay. But you see my share? No, I don't think you see it. Stop and start again. Okay. You see my screen? Yeah, see it, right?
Yeah.
So this is from the outside, how it looks now. Before it was like all different colors and all that. And the occupancy is 94%. You see they plant some palm tree. Plus they paint and make the railing outside more appealing. They fix these wood for them, for the tenant. And then it looks cool and nice and clean. And they say physical occupancy is 94. So it's pretty packed. I don't think they have any unit to show. And a lot of Hispanic community here. So they just referral. So we see the website and everything, but it's not where they get their tenant. Apparently, like their tenants just refer each other to come move in. So, and then this is sorry, this is the average rent increase in terms of new lease. Yeah. So they have 25 lease renewal. And that almost half of that for the expiries for the quarter. And with 10 unit renewal in the subsequent quarter, so the next quarter they just have 10 unit renewing. The overall renewal rate of 54 expiring lease now 64%. So they know that some people are gonna be renewing next quarter, and they have 38 new lease from the 19 renovated fire unit. Okay, so 19 of them, and they have another 19 new lease that's showing also a rent increase of 291. So before the totally new renovated unit just push the rent to almost 450 per unit per lease. But then the one that they should give out new lease cleaning up and not really do renovation is almost push it to 290. So without any drop rate.
So that's why they don't do a lot of renovation inside the unit anymore, but still get that. So that's why saving money on their capex budget, I guess. And that happened with 19 of the new leases and 19 of the renovated units. So far 39 have new leases and 50, so like 10 renew next quarter, 25 new. So quite a lot of new rent already. So let's say 25 plus 38, right? So they have 63. 63 is how many percentage of this? Almost more than 1/4, right? That have the new lease already. So let's say that if they keep going like this, with the 3/4 of like with 150 units that have the old lease of 900, they keep just doing this, then they're gonna hit their projection in 5 years. So they on track, I would say. They're on track, even without like depending on renovation and heavy construction inside the unit. So I think that's the positive thing that we can see here. So 63 of the older units already have a new lease price and renewal price.
After the end of next quarter, right?
Yeah. And we don't know how many gonna have the new lease in the next quarter, but that's positive as well. So, but then I still don't understand about the NOI here yet. But we're gonna figure it out in the next call. So any discussion, guys?
So it appears like when they pay for 5% purchasing cap, they pay market price for it. They didn't get a discount. However, the property is severely under market rent comp. I mean, the rent is 30% higher in the market. They're only charging 900, but they could get 1,300. That's what Milo operators seem to find out because they have other apartments nearby. They find out that market rent is at 13. But currently they bought this thing where most of the rent is like 900. So it's severely under market rent.
Yeah,
Meanwhile,
totally.
buying at a 5 cap is buying high. They didn't buy it at a 6 or 7 cap. They bought it at a 5 cap. So they
Plus
bought it
the
at
market, Andy, like this pocket, in this pocket and this
Mhm,
type of property,
mhm.
um, buying 5 cap is the lowest they can pay already.
Oh, is that true?
Yeah, because they have a sales comparable for the apartments in the area. None of them trade at this price. This is the lowest so
Hmm.
far in the past 2 years that they found. So other apartment trade at 85, some 100, some 90 something, some 100 something in this area. So um, none of them ever trade at 70 something. So they
You're
already
talking
got a
about
good price.
Yeah, you talk about price per door, but in terms of cap, buying at a 5 cap, because you want to buy at a 6 or 7 and sell at a 5. Um,
It's not
buying at a
really true because in terms of if they are collecting rent under market rent, then they're
Yes,
not collecting much. So that's why the
correct.
cap rate is low when you buy.
Yep,
But
yep.
it's a
That's
very when I first looking at these as well, I was like, you want to buy at a high cap rate, but everyone say no. Like you buy low and then you sell at a higher, you project sell at a higher because
mhm,
you push the
mm,
rent up.
correct.
Um,
That's why in the end, they could buy at a 5 and still sell at a 6 and made money. because they according to Sasha's underwriting, they'll end up selling at 6 because the NOI is so high, it makes the property value at 30 million. So they're buying at 16 million and trying to sell at 30 million in 5 years, even though they're buying at a 5 and selling at a 6. So you're absolutely right about the cap. Um, Selling at a higher cap is possible. Yeah.
Yeah, so the cap doesn't say much in this case because of
Mhm.
the
The
unit
rent being so low.
association and the
Yeah.
buyer unit. So we have to see the whole underwriting at the whole thing instead of just the cap.
Hmm. Hmm.
Yeah.
True. So
And
they have about 10 units that's on fire. Did they start working on those?
18 units.
Oh, 18
Yeah,
units.
already renovated. When the seller sell them, didn't get lease yet.
Oh, so it's all fixed already.
Yeah, I'll fix already. So they take over, they
Nice.
lease them out.
Oh, good, good. Okay. Okay.
So for that,
Mm.
I think they just good timing. So they just approach the seller as good timing, and the seller could sell for more, but they already went under contract, and the seller honor the his word that he's gonna sell to them. So he's gonna sell.
Okay.
So he just
So the Milo project is already bought and closed, and are they still raising funds, or they done raising funds?
they still raising fund for the last million of their capex budget, but I
They
think they
don't plan,
already
they
filled
don't think
up.
need it. They may not need it though, right?
They may not need it. Yeah, but they say that
Mm.
they might not need it. So whether raised or not raised, they don't care that much.
Oh, okay. Okay. So now it's just a matter about executing the plan and waiting 5 years out and selling it.
Yeah,
Okay.
yeah. Seem like it. So I think it's complicated at the beginning. But once you hit the pro forma and there's nothing major change in the market, then it's like not that much of a headache. And then that's why they go out and acquire
Mhm.
new
You know,
project.
so when they close on this, since it's a 5 year projection, did they get a 5 year loan minimum? The
No,
term of the
this is
loan
a
was
30
minimum?
years loan.
Okay.
No, this is a 30-year amortization loan, and it's a
But a
long-term loan.
balloon
But have
also,
a
okay.
It's a long-term loan and have a 3 years interest only.
Okay.
Yeah, we can see on the underwriting what's the term, but as I know, this is a 5.4% cap interest rate. It's funny, right? Like you buy a 5.1 cap rate with a loan that's 5.4, like it's higher, the interest rate is even higher than your cap rate, but you still can make money. So that's something that normal people look at it as like, why would you buy apartment for 5 cap when you can make I don't know 5.5 with treasure
Yeah,
treasury or
but
something.
because it's not all about cash flow, it's about
It's
appreciation
not.
also.
It's
Yeah,
not. It's equity. It's an equity
yeah,
gain. Yeah.
equity. Yeah.
Yeah. So for me, like the more I look at this, the more I'm familiar with, because at the beginning when I look at this, I also like, why you buy a very low cap rate? And that's with us analytical. Like Preston Rock say that like analytical people on the game almost like against them because they're too analytical. Sasha, did you find out about the terms?
No, I don't see terms in here. I just 3 year interest only. That's it.
Yeah. So what I see is like they can totally do this and still leave the meat on the bone for the next buyer because they didn't upgrade the units. So they didn't upgrade the unit. The next buyer come in like, is there any value add I can do here? So their value add would be like, okay, they didn't renovate that much, but they should increase rent. So now I'm just gonna renovate them and increase more. And that's how they can sell even faster. But if the cash flow is so good, people say that, hey, if the cash flow is so good, you can just keep holding them forever but I guess the amount of equity they can cash out and put into another project and generate more equity is always way higher than holding forever.
Mm. Mm.
But I thank you for attending, guys. Like any other question, Bob? Oh,
No, not me. It was nothing on this end.
did you understand, or we just like
No,
going
I
through
understood.
the
At the beginning, I was just looking at the it's a bold plan to say the least. But if executed properly, could
yeah,
be more returns.
yeah, totally agree. Like because they know that pocket of their market.
And that's extremely important.
Yeah, that's so important. That's why I'm trying to just do whatever Dallas right now because I'm in Dallas and I think like I can just drive around and do all the things that necessary to understand about that pocket. The 66 unit, to be honest with you, I didn't like it that much because it seemed too much work and seemed like a shady numbers that they represent. So they present to us shady number. So I don't know what other things that we don't know about it, and it just make me feel like, oh, we walk into something that we don't know.
Mm.
Yeah. I feel it too. You can look at it both ways, right? I mean, yes, that's happening, but on the other hand, that could be the deal, right? If you figure it out and you put in like an LOI that makes sense, then yeah, because it'll push away some people, and some people will make money on this.
Yeah.
So on the 66, do you think we would just play a waiting game, wait out another month or two, see if they're motivated to lower the price, or are we gonna just walk away from that property?
No, I'm actually interested in talking more to this broker to understand what's going on. So like ask the questions we had. What happened to make ready? Where is the make ready budget? What happened to this capex? Why is everything rolled into it? So yeah,
Okay.
so I think more discussions with the broker.
Yeah, we can
Okay.
also ask why the finance fell through. What did the underwriter say that make the finance fell through, right?
So instead of just wasting like burning a lot of time, do you want to just throw out a number and see what the broker thinks? Like throw out some lowball numbers and see if he would get insulted by us or if he's open to it, and then we go further. Would it benefit us just to throw some number at him?
I threw a number at him of 5.5. He said he doesn't believe it's going to trade at that number, but it is in the ballpark. So
Okay.
at the end of the day, like we can say 5, right?
Mm.
But we still want to know more about the situation. So I feel like I'm almost not ready to throw a number at him yet. I just want to ask a few more questions and then throw a number.
Okay. Okay, good. Okay. Mm.
Yeah, so basically just keep the conversation going and also good relationship because Silver, he's the guy at Marcus Millie Chap and in charge of the Dallas market. So a lot of the deals that from Marcus Millie Chap you're gonna go through. And he actually represent the Fountain of Juniper as well, which I think you guys underwrote.
Yeah, we did. Yeah, but I mean, thinking of it like 5 million is a million less than what they're asking for. And that's 75K per unit. If you compare it to Milo, which was what, 71?
Less than 10.
Yeah, so about 71 per unit. So the question is like what the condition and the opportunity here. I think the opportunity here exists, but it's just the right number.
Yeah, totally. Like any deal, if it's the right number, it works.
Yeah.
Right. So,
Cool. All right.
yeah. Thank you for coming up, guys. So,
Oh,
um,
of course,
we gonna
have fun in Mexico. Come home soon.
we come home soon. Yeah.
Too soon.
Yeah.
Soon.
2 more
Yeah.
days, and then we're gonna talk more with the brokers, underwrite more deals. Hopefully,
Mm.
this year we're gonna get to something.
Yeah. Sasha, I'm home all day and I spent all my time looking at apartments. So if you ever are bored or someone need someone to, want someone to look at something with you, I'm either un underwriting or I'm calling brokers. I'm cold calling brokers just to make connections, just to see if they have any good deals. And so I mean, at any moment, I'm looking at 15 apartments. I have it on here. Example, one thing I saw that in Dallas, maybe there's 8 or 10 in play, but 3 or 4 of them are like C class or in bad area, and the numbers don't work out, so I just skip them. Um, I'm trying. Are we trying to buy a solid C or a solid B? What do you think?
I
I know
mean,
I saw the number
open to
works out.
both.
Yeah, you're open to both.
I'm
Yeah.
open to both. I
Um,
think it's the opportunities more, I think, in the C. Like when I look at all the different deals I looked at, like the Milo deal seems like an amazing opportunity. And yes, the stars align, perfect timing, all of that. But if you look at the bones of it, it's a C class property in a C class pocket that's surrounded by B
Surrounded by A.
and A,
Yeah.
right? So
It's a B class bucket, even B
yeah,
minus. Yeah.
yeah. So that's kind of like a real gem, right? But it's hard to know it when you're not in the area, right? When you just look at the property or the map, it's hard to know what's going on.
Yeah, that's why people will become the expert of the area. I remember, who is this guy? I remember in one of the Brassam Rock event in Amnapon, he invited the Madera founder. What's his name? Forgot his name.
Yeah.
Yeah, and he know every single pocket where his apartment at in
Are you,
Houston, in Dallas,
are you talking
and
about
that's like
Charlie?
he's Bob. You remember his name?
Is that Charlie?
Charlie.
Charlie,
Yes,
Charlie Young, yeah,
Charlie Young.
yeah,
Charlie Young.
yeah. I remember listening to that presentation, thinking, "Oh my God, that's like how I know Brooklyn in the back of my hand, like every single almost cross street at the time. Not anymore, but at the time I did. So yeah,
okay.
Gabriel Kraft and Brand Martinez say that a lot too. They focus on a very discrete area. They're experts in that part of the Dallas area, and they do well by that strategy.
Mm. Hey, Bob, where do you plan to buy? I mean, I know Dallas and Sophie want to buy in Dallas, but Sophie and Sasha want to buy in Dallas. Where do you want to buy, Bob?
I am I say probably Dallas Fort Worth area just because of the expertise and resources that are available there. But I'm also looking, I'm going to start looking in my own backyard, New Mexico, because this is a market I'm familiar with. It's just a matter of resources are not as large as Dallas. So maybe that's something to help build there as well.
Yeah, that's how I feel too. Because the resource and the networks in Dallas, and Dallas has all kind of like under 60 unit, over 60 unit, over 100, over 200. But our problem is if it's under 10 million, I mean over 10 million, Sophie, how would we play this out? If we find something like 8 million and above, how would we take it down? I mean, are you going to raise and syndicate? I mean, I think between 3 and 6 or 7 million, okay, maybe we just do as a small partnership and we can buy something between 3 and 6, 7 million. But over 6 or 7 million, I don't, are we syndicating this?
Yeah, so our goal is to syndicate it. And
Okay.
the game of syndicate is once you get the first deal in and you're doing it, the next deal gonna come. And then you have to syndicate, because if you put all of your cash into your first deal, the second deal broker say, hey, there's a better deal. And I don't have any money. Like when you don't have any cash, then it's a problem, right?
Okay.
Because then
So,
you cannot raise when you don't have money.
okay. So what kind of unit are we looking at? I mean, are we looking above 60 or under 60?
Yeah, above
Or
60.
between 60 and 120?
Yeah, like 60 to 120. I think it's the sweet spot that
Okay.
for the first deal. Yeah.
Okay. Okay.
Because you can get professional management in
Mhm.
instead of manage yourself. Under 60 doesn't make sense.
So we're talking about 6 million to 12 million. That's what we're targeting.
Correct.
The only thing I would say is that there's going to be probably a lot of competition for the newer investors in the 60 to 120 area. So while
Mhm.
I think it's more optimal going that way, the competition levels will be up as well.
Like you think that under 60 will less competitive?
I don't know if a lot of people are thinking in that range. It's certainly not the
Yeah.
bigger investors. The newer investors may be inclined to go above 60. I think there might be a pocket there. You may not get a lot of return per se, but you get your feet wet.
So what I find is this, like buying apartment is a very is a high entry level.
High barrier of
High
entry.
barrier, like there's a high barrier in understanding and like align with the actions, and then like finally get a deal under contract. Like people working for a couple of years to be able to get into one deal. And I think we have an advantage that the syndicators that already syndicate like nonstop the past few years, some of them gotta stop right now because of the interest rate hike. And that's why there's like more of an open market for us. I think like, I don't know, maybe I'm just too positive thinking, but like this is the time that those people gonna get a little rest, and that's why you can get some from them, and they wanna sell as well. So because they wanna exit and then gather the troop and gather the money and then go buy, and then also it's hard for them to raise money. So that's why some of those people stop buying, and that's why there's chance for new investor like us to come into the market. And then Andy, how do we tackle bigger if it's bigger, right? So we bring a bigger player in. So that's what we do, because all of us here new, and when we got a deal, we bring in a more experienced investor, and that's what they do. Like we have that resource in the Preston Rock group, and Bob also know that, right? Like we can bring in more experienced GP. They can take on the loan, and then they look at the deal as well, and they'll tell it, hey Andy, this is not a good deal, don't do it. Or they tell us, oh Sophie, this is a good deal, if you can negotiate it's like 4.5 instead of 5. And we go back and we negotiate, then they bring in their value and they taken on the loan. Or if it's 12 million or whatever we want to raise, we can use their expertise and experience to make the deal into a good deal, and that's how we can raise money.
Can you go ahead and maybe give further detail when you said you bring someone in, how do we pay them? I mean, just so I know, so I can factor things in when I'm
Oh,
calculating numbers.
so we're already paying them, right? So we're members in this group. We're also paying them in terms if they're our buyer broker. right? So they also get a payment, right? So the service they provide is that service that Sophie's talking about, right? That advising of, is this a good deal at this number with these parameters at this time, at this cap rate, et cetera, or is it not a good deal? You should negotiate more, right? So they're kind of
Okay.
on your
So
side, they're in your network.
so it's the buyer broker's fee. How much how much is that fee?
I think it's a 60K.
50K under 10 million, and then
50K? Okay.
more than 50, more than 10 million, then it's 60 or something. I don't
Okay.
remember.
So
But what I
so
talk
for
about is to bring in another GP that's more experienced, and they got paid by equity.
okay, so is that two-person? Bringing in the buyer broker, which we pay 50K, and then bring in a KP. Is that a separate fee? So now are we talking about two-person?
Well, we
The
can have
KP and the buyer
buyers
broker?
brokerage or not. So it's not a necessary, but a more experienced GP who will become a KP, um, they will get acquisition fee and they will get equity.
Good. Okay. Um, what is the projected numbers? So they get acquisition fee and an equity part of the partnership. I mean, of the syndication. Can you give some numbers on that one?
Yeah, so a lot of syndication depend on the role that the GP is playing, the manager playing. They get the percentage of the work that they do it. So for those, there's a spreadsheet that I really recently got shared, but it's usually at the discrete of the discussion
Mm,
among the GP. So
yeah,
whatever
it's the
fair,
size of the project, I'm sure. Yeah.
yeah, like,
Okay.
are you taking on capital raising? Are you gonna manage the asset? Are you gonna, if you are the one that's sourcing the deal, then it's a different pay in equity and in percentage.
Mm, okay. Okay. So for sure, we're gonna need to bring on someone very senior and experienced to KP for us. But then but we don't we do we really want them to asset manage afterward? Probably not.
They can guide us. They wouldn't take on those. They will let us do it. So a lot
Mm,
of the more experienced GP, they um they guide you more than they do the work. But you do the work, and then you come up with the problems and they solve it because they meet those problems before.
okay. So are you saying that as long as we underwrite, we put it out an LOI, and then they take over, like
No, they
the
don't take
KP
over.
take over? They
They
don't.
don't take over, no. They're continuously advising us. So think of it as sort of having a continuous guide, right? Who's done this before, who's seen these problems before, who knows which questions to ask, not just has the answers. So they're basically guiding us, and we're paying for it in terms of equity, right? The buyer broker is just a flat fee. They're not here for the equity. They just get paid. It's a one-time fee.
Okay. So
Yeah, but
would
they
buyer
also not gonna tell you whether it's a good deal or a bad deal. They just gonna help you to the finish line.
Oh, wait, did you say they will tell you that it's a good or bad deal, or
They
they
will
won't?
not,
They will not. So it's
because
up
they are
to
just
us.
represent you and help you to the finish line. They just a broker, just like real estate agent can tell you this is a good deal in their, you know, but they don't want that responsibility.
And they,
So that's why
and
they're
they
not gonna
have
tell
they have a
you
lot of
whether
good
this is a good deal, but they tell you that okay, you're underwriting right or wrong.
Yeah, Bob is
You
trying to
know,
say something.
well, the broker, they also have connections. They know who to work with and all that. They kind of get you in the front door along with an experienced GP. So they bring a lot to the table. But again, if you have an experienced GP, they may say, you know what, we don't need to engage a broker on this. Yeah. So, and again, I think the people, an experienced GP is probably going to prefer to be not necessarily have a hands-on role to be, because they have all this other stuff going on in their life. So just kind of provide the guidance and bounce questions off or show them the underwriting. What do you think about that? I don't see them doing asset management.
So would the experienced GP be negotiating for us, or they just back like on a backseat advising only? Basically, are they taking an active role or like more of a passive advisory role?
I think
Can
it
get
goes,
back.
I think it just goes back just having, the team decides, having a discussion with that experienced GP. This is what we would like. As far as our team, would you be willing to fill this role or that role? It's not predefined. At least that's what my belief is. You just kind of have that
Exactly.
discussion.
It's for us to decide what is that relationship, right, as a team.
Okay.
My
So
hope is that we're doing the work, so we're learning, and they're in the background helping us. That's all. So I would not want someone to negotiate for us. I would love for us to do that.
okay.
Cool, amazing. Wow.
Cool.
I think this was the first one that we've ever done from Mexico. Lessons
Yeah.
learned next time. Bring the mosquito spray before we start the meeting.
Hey,
Yeah.
FYI, I'm going to be on a plane next Tuesday, so I'm going to miss next Tuesday's call.
Oh,
Oh,
cool. So yeah. We hope we can still update you on things how it's going up.
Appreciate that.
mm,
All right. So yeah, thank you for joining the call, guys. And we're gonna end here, and hopefully we're gonna see next more people next call, and have progress on our offer and everything. And
Cool.
okay.
enjoy your time, Bob.
All right, thank you.
Cool.
Bye.
Bye, Bob.
Bye.
Bye,
Awesome.
Bye,
Andy.
Andy.
Bye, Sasha. Yes.